Hey, very good evening to you traders. This is Mark, and we've got the jobs number tomorrow, 1:30 UK time, Friday, 2nd of September. Now, we know this is a big number because Yellen's comments last week. A lot of people are going to be watching this to see, supposedly, if the US economy can withstand an interest rate hike. Whatever, doesn't matter. Let's just focus on the fact that the markets potentially are going to be moving. How can we make some money? Well, the thing I always do before I go into these type of big numbers is that, I know that the markets are potentially going to move and there's potentially going to be some opportunities there. So I need to be in the right frame of mind and have the right checklist done before I go in to the trading day. So the number one thing, above anything else, and it's boring, but it's so true, is managing your risk. Too often people go into the big numbers, big reports, big expected volatility type day and then lose money because they're just expecting to make money due to the volatility. I know, I've done it myself, and this is why I now operate a checklist to stop myself going in and expecting that I'm just going to make money just because it's volatile. It's a double-edged sword. You can lose money as well. And the fact that things are moving quickly means that things can get out of hand pretty quickly if you're not managing your risk. So I always like to set a predetermined size I'm going to trade and the risk parameters. So what I mean by that? Well, basically, what size position I'm going to trade when I'm in my spread bets, so how much per point I'm going to trade, which markets I'm going to trade, what's my maximum loss per trade going to be, and what's my maximum loss on the whole sequence of trades over the jobs number, over the volatile event. So once I've got those parameters, I know that I can't lose more than that, and I get those to a comfortable level. Whatever that may be for your size account, whatever that may be for your experience, set that level and say, this is my maximum risk on the day, and this is going to be over a period of 3 trades, 5 trades, 10 trades, whatever your strategy type is. Then split that up and then work it back into the size of stop you're going to have and the position size. So then you're not making these on-the-fly decisions when the market's moving around aggressively. You don't want to be looking for a trade and thinking, is this a £10 a point trade or a £100 a point trade? You want to have that in your mind already. Know where your stops are going to be. Worst case scenario. Yes, you can tighten them up, but always have a worst case scenario stop and then tighten it up based on the setup you've got and your overall risk parameters. And then you can be comfortable and say, worst case scenario today is I completely mess everything up and I lose X amount, whatever that may be. Whatever your figure is, set it, and then you can become comfortable. The market can't damage you. Then the second thing is have an overall plan of action. So which markets you're going to trade? I've got this here at number 4, but that really ties in with the second one here. Which markets you're going to trade? Don't go crazy and go, I'm just going to look at everything. Pick stuff that's going to be moving. Now, that's likely going to be the DAX, the Dow obviously futures, but we can still trade those, of course, spread betting. DAX, gold may well move, US dollar, yen, pound, dollar, anything with a dollar. So I'm going to pick 3 of those. I'm going to look at myself, I'm going to look at the DAX, the US dollar, yen, the Dow, and I may add in the pound dollar just because of today's move. But I may just narrow those down a little bit more depending on which is moving more. The DAX and the Dow will move similarly, and perhaps the DAX might be a little bit more convenient. But the point is I'm not looking at a massive array of things and then flicking from screen to screen to screen. Have my plan of action, but include some flexibility. So that means, okay, so let's say I'm now going to trade the US dollar yen. What is my plan of action? Am I going to wait for support to break and hold below support and take a short? Or are we going to look for a fake to the upside that fails? How does that fit in with the longer term time frame on the chart? And where will my trade be? Of course, if it rips to the upside, am I going to buy a pullback on that? Or am I going to use that as a guide to then trade something else? Just start to put your plan of action in. There's no need to be so strict about it and say, well, if it definitely crosses this level, I'm going to buy. Because, of course, the markets aren't like that. You've got to assess what the situation is doing on the day. So have a plan of action. Decide the levels you're going to get interested in. Have your key levels marked so that you know it's a significant level. If you suddenly look at the chart and see it ripping through and that's gone through some multi-month high and consolidating, that's much more powerful than a 1-minute high. So knowing the levels and having the key levels marked. Knowing the markets you're going to trade. Having a plan of action, but giving yourself some flexibility as a trader and keeping your risk parameters. And the final thing, which is a big thing that damages people, is don't assume you're going to get any volatility. There will be some, but it might just be quick spike and then flatten out as everyone goes off for the long holiday. Or indefinite volatility. Let's say you do get some volatility for an hour or so. Don't assume that that's going to continue for the rest of the day. It would be great if it does and we get a nice move right up to the US close. Perfect. That's a perfect type of jobs number day. But often we don't. We get a lot of volatility and it dies off very, very quickly. Volume declines. Everyone, as I say, everyone goes home, and then you've got to step back and say, you know what, conditions have changed. Maybe it's time for me to go home now. I've made my trades. The environment's different. The volatility's dropped. Let's move on. So that's a very important thing, to just keep an eye on the volatility drying up on you, if it even happens at all. We could have nothing. It could be complete damp squib, but let's see. And the final thing is, of course, manage your risk. It goes back to the first one, but it's so important because in the day, protect your capital, protect your money, and your emotional capital. 2 capitals to protect. So that's what I'm looking for tomorrow. Looking forward to the jobs number. I hope there's going to be some action. If there's not, we've always got next week. Okay, guys, take care.